Listen to me, because what I am about to tell you is not a conspiracy theory. It is not internet fear-mongering. It is legislation. It is written in black and white in regulatory documents that most people never read because they are 800 pages long and designed to be boring. But I read them. My team reads them. And what I see coming in 2026 is a fundamental structural change to the banking system that could freeze your retirement checks, lock your accounts, and leave you with zero liquidity exactly when you need it most. They are calling it enhanced digital verification. It sounds safe. It sounds like protection. It sounds like something you would want. It is actually a digital cage. And if you are over the age of 60, if you rely on Social Security, a pension, or an annuity, you are the target. The banking system is moving from a model where you are innocent until proven guilty to a model where you are guilty until proven verified for every transaction you make. And if you do not understand the new rules, you're going to wake up one morning to find your life savings inaccessible. I'm going to break down exactly what this new banking law entails, why it is being implemented now, the geopolitical reasons behind it, and the 4 specific steps you must take to firewall your money before the switch is flipped. But first, if you believe that you have a right to access your own money without asking permission from a bank algorithm, smash that subscribe button. We are building a community of people who refuse to be controlled by the system. We are the sovereign investors. What is enhanced digital verification? Starting in 2026, new Know Your Customer, KYC, and anti-money laundering AML regulations, specifically updated FinCEN guidelines, are going into effect. These rules shift the burden of proof onto the depositor. Previously, if a bank wanted to stop a transaction, they had to have a reasonable suspicion of fraud. Now, banks will be required to verify that a transaction is legitimate before processing it if it falls outside of your historical pattern or risk profile. Here is what that means for retirees in the real world. You have lived a predictable financial life for 20 years. Checks come in from Social Security. Bills go out to the utility company. You are boring. Banks like boring. But suddenly, you want to do something different. You want to withdraw $15,000 for a medical procedure that Medicare doesn't cover, or you want to send $10,000 to a grandchild for a down payment on a car, or, and this is the big one, you want to move your savings to a new bank because they are offering a 5% interest rate and your current bank is offering 0.1%. Under the new rules, the bank's AI algorithm flags this as anomalous behavior. It doesn't ask you if it's you, it just stops. It freezes the transaction, it freezes the account, and it demands enhanced verification. This isn't just showing your ID to a teller. This involves biometric scanning. It involves uploading documents to a secure portal that you have probably never used before. It involves answering intrusive questions about source of funds and purpose of transaction, and then waiting 3 to 5 business days for a manual review by a compliance officer in a cubicle 2,000 miles away who has never met you and doesn't care about your emergency. If you are 75 years old and you don't use a smartphone well, or you don't have a scanner, or you don't understand how to navigate a 2-factor authentication portal with codes texted to your phone, you are locked out. You are effectively cut off from your own wealth. The money is there. You can see the balance online, but you cannot touch it. You cannot spend it. You cannot wire it. You are digitally imprisoned by your own bank. The bank isn't doing this because they are evil. They are doing it because the government has threatened them. If they let a fraudulent transaction through, the fines in 2026 are going to be astronomical. We are talking billions. The regulatory penalties have increased by 400% in the last draft of these rules. So they are terrified, and a terrified bank is a dangerous bank for your money. They would rather freeze 1,000 innocent seniors than let one money launderer through. You are collateral damage in their compliance war. Why 2026? The CBDC precursor? Why is this happening now? Why the rush? Because the infrastructure is being laid for a central bank digital currency CBDC. Whether you like it or not, whether you agree with it or not, the digitization of the dollar is coming. The Federal Reserve is piloting it right now in multiple test programs. Other countries are already doing it. China has the digital yuan. Europe is testing the digital euro. India is rolling out the digital rupee. America is not going to be left behind. To make a CBDC work, the government needs total visibility and control over transaction flows. They need to know where every dollar goes, who spends it, and what they spend it on. Cash is anonymous. Digital dollars are tracked. Every transaction leaves a permanent digital fingerprint that cannot be erased. This enhanced verification system is the beta test. They need to see if they can control the flow of money at the retail level by tightening the screws on seniors who hold the majority of the cash deposits in this country. According to Federal Reserve data, Americans over 60 control more than 70% of the wealth in traditional bank accounts. You are the testing ground. They are testing the system's ability to monitor and restrict capital flight. Think about it. If there is a banking crisis and everyone tries to pull their money out at once, the system collapses. We saw it in 2008. We saw it with Silicon Valley Bank in 2023. But if they have enhanced verification protocols in place, they can just pause withdrawals for security reasons. They can slow down the bleeding. They can require additional documentation before processing large transfers. It is capital control disguised as consumer protection. It is a way to stop a bank run by locking the doors digitally without ever admitting that the bank is in trouble. Here is the nightmare scenario. Your Social Security check hits your account on the 3rd of the month. It is your lifeline. The same day, you have an auto draft set up to pay your mortgage, your car insurance, and your credit card bill. But the day before you logged into your bank account from a coffee shop while you were traveling, or maybe you bought a piece of furniture online from a new vendor you found on Facebook Marketplace, the bank's system flags a security concern on your account. It locks it down for your protection. The Social Security money hits the account, but it is frozen. You can see it. You can't touch it. Your mortgage payment tries to clear and it bounces. Insufficient funds or account restricted. Your credit card payment bounces. Now you get hit with late fees from the mortgage company. You get hit with a returned payment fee from the credit card company. Your credit score drops 50 points overnight, and you are on the phone for 4 hours listening to hold music trying to talk to a human being who has the authority to unlock your life. And when you finally get them, they say, "I'm sorry, sir. I'm sorry, ma'am. This has to be reviewed by the fraud department. It will take 48 to 72 hours. We cannot override the system. It is for your protection." What do you do for those 72 hours? How do you buy food? How do you put gas in the car? How do you pay for your prescriptions at the pharmacy? This is already happening in small doses. I hear the stories every single week. Kevin, my account was locked for a week because I bought a plane ticket to visit my daughter. Kevin, they froze my debit card because I used it at a gas station 50 miles from my house. Kevin, I tried to wire money to pay for my granddaughter's tuition, and the bank demanded I come into a branch with my birth certificate and 3 months of bank statements to prove it was really me. In 2026, this becomes the standard operating procedure for any transaction that deviates from your established pattern. We used to have a banking system based on trust. You deposited money, it was yours. The bank held it for you. You could withdraw it whenever you wanted. That was the deal. Now we have a banking system based on surveillance and suspicion. The algorithms are being trained to view deviation as risk. And as you get older, your life changes. Maybe you downsize and sell your house. Maybe you start gifting money to your kids or grandkids. Maybe you have high medical expenses that come in waves. Maybe you finally take that dream vacation you have been putting off for years. All of these things look like risk to an algorithm that has been programmed to flag unusual activity. The algorithm does not care that you are a 70-year-old retired school teacher who has never broken a law in your life. It just sees numbers. It sees patterns. And when the pattern breaks, it assumes fraud. If you act like a free human being making normal human decisions, you get flagged. If you act like a robot doing the exact same 5 transactions every month for the rest of your life, you are fine. That is the world they are building. A world where financial freedom looks like financial fraud. So, Kevin, this sounds terrifying. What do I do? How do I stop them from holding my retirement hostage? You cannot stop the regulations. The train has left the station. The law is being written right now by people you did not elect and cannot vote out. But you can build a personal defense system. You need to build redundancy. You need a system that does not have a single point of failure. Step 1. Do not keep all your money in one bank. This is rule number 1. But specifically, you need an account that is operationally separated from your daily life. I call this the vault account. Put 3 to 6 months of living expenses in there. Not your emergency fund, not your spending money, your survival fund. Here are the rules for the vault. 1. Do not connect a debit card to it. Cut the card up if they send one. 2. Do not connect it to Bill Pay. 3. Do not connect it to Venmo, PayPal, or Zelle. 4. Do not use it for Amazon purchases. 5. Do not log into it from public Wi-Fi. 6. Do not check it every day. Check it once a month to make sure the balance is correct, and then log out. This account sits silent. It has 0 transaction volume. Because it has 0 volume, it has 0 anomalies. The algorithm ignores it. It is invisible to the risk monitoring system because there is no risk to monitor. If your main spending account gets frozen by an algorithm because you bought a weird hat online or because you logged in from a hotel on vacation, you walk into the branch of your vault bank, present your ID, and withdraw cash. You have a lifeline that the algorithm didn't kill because it wasn't connected to the infection. Step 2. Banks are aggressively pushing you to name a trusted contact, someone they can call if they suspect fraud or diminished capacity. Usually this is an adult child. Do this, but do it strategically. Do not just put a name down and forget about it. Pick someone who understands finance, who answers their phone, and who will advocate for you when the bank calls, and give them a code word. Sit down with your son or daughter and say, if the bank calls you saying I'm being scammed or that I am not mentally competent to manage my money, ask them to let you speak to me directly, then ask me for the code word. If I don't give it to you, maybe I am in trouble. Maybe someone has a gun to my head. Maybe I have been compromised. But if I do give the code word, tell the bank to unlock the account immediately. Tell them you vouch for me and that this is a legitimate transaction. You need a human verification loop to override the AI verification loop. You need a protocol that you control, not one the bank controls. Step 3. Move a portion of your funds to a local credit union. Why? Because credit unions are often on different regulatory platforms than the too big to fail mega banks. They are smaller. They are member-owned. You are not a customer. You are an owner. And you can actually talk to the branch manager who lives in your town and shops at the same grocery store you do. If a mega bank freezes you, you are a number in a database in New York or Charlotte. You are arguing with a chatbot that cannot make decisions. You are stuck in an automated system designed to protect the bank, not you. If a credit union freezes you, you can drive to the branch on Main Street and say, Barbara, it's me. I've been banking here for 15 years. You know me. Unlock my money. I'm standing right here. In 2026, human relationships are a premium asset. You cannot algorithmically freeze someone you see at the grocery store every week as easily as you can freeze a stranger on a spreadsheet. Step 4. I'm not a conspiracy theorist, but I am a realist. You need physical cash and a safe at home. I'm not talking about millions. I'm not talking about stuffing your mattress. I'm talking about enough to cover groceries, gas, and medicine for 2 weeks. Maybe $2,000, maybe $5,000, depending on your lifestyle. If the digital system goes down, if your digital identity gets flagged, if the bank's computers have a glitch, cash still works. It is the ultimate bearer instrument. It has no lag time. It has no verification algorithm. It has no 3-day review period. It does not require a smartphone or a password or a fingerprint scan. You hand it over, you get your goods, done. In a world of digital control, cash is freedom. Hold some freedom. Step 5. The notice of intent. If you are planning to do something anomalous like buying a car with cash, sending a large wire to pay for a home repair, or making a significant withdrawal, call the bank before you do it. Get a human on the line. Tell them, I am about to authorize a transaction for $15,000 to this recipient for this purpose. I am calling to notify you in advance. Please note my account. Do not freeze it. This is legitimate. Ask for the employee's name. Write down the time of the call. Document everything. If they still freeze it, You have a record. You can say, I authorized this with John Smith at 2 p.m. yesterday. I followed your protocol. This freeze is unjustified. It makes it much harder for them to hide behind suspicious activity when you pre-notified them and created a paper trail. The mindset shift. You need to stop thinking of the bank as a vault where your money sits safely waiting for you. The bank is a utility. It is a service provider. It is a vendor. And right now, the service provider is changing the terms of service to benefit them, not you. They are scared of regulators. They are scared of fines. They are not scared of losing you as a customer because they know the whole industry is doing the same thing. They know you have nowhere else to go. Prove them wrong. Diversify. Build backups. Build redundancy into every layer of your financial life. Be the customer who cannot be trapped because you have 3 escape routes instead of 1. In 2026, the people who get hurt will be the ones who trusted the system to work perfectly. The system never works perfectly. It works for the system. It works for the regulators. It works for the shareholders. It does not work for the retiree trying to pay a bill on a Sunday when the fraud department is closed. Protect your checks. Protect your dignity. Do not let a compliance algorithm decide if you can pay your electric bill or buy your grandchild a birthday present. If this video opened your eyes, smash the like button. It helps us get this warning out to more seniors who need to see this. Leave a comment. Has your bank ever frozen your card for no reason? Has an algorithm ever locked you out of your own money? Tell your story. We need to document this. We need to show the world that this is real and it is happening right now. And subscribe. Join the membership. We are watching the regulations so you don't have to. We are the watchdogs. We are reading the 800-page documents that were designed to bore you into submission. We are translating bureaucratic language into action steps. Get prepared. Get redundant now. Get out there and safeguard your retirement.